In this video, traders are going to look at what is socially responsible investing, or SRI. Stay tuned. Hey guys, warm welcome to you. All right, so socially responsible investing, pretty much as it says it is, but let's just run through some of the main facts and maybe look at some of the companies that you wouldn't want in a portfolio if you're looking at. So the whole point of socially responsible investing is, one, to encourage good practices. I'll put this in inverted commas and we'll define those in a second, and discourage bad practices. So good practices are generally considered as stuff that helps the environment, number one, stuff that helps human rights, stuff that protects consumers, anything that's kind of seen as a good kind of ethical thing to do. So any company that is doing that or supporting that generally would be okay to stick into a socially responsible investment portfolio, or to go into a socially responsible investment ETF. So some of the companies that would be considered as bad practices, or some bad practices, would be things like alcohol, tobacco, human rights, anything to do with kind of weapons or gambling, fast food, animal testing, that kind of stuff. Anything that's considered kind of bad would be considered unethical and wouldn't get into a socially responsible portfolio. So why do people decide to do this? Well, the obvious one is they want to feel good about what they're doing when they're investing. Okay, they don't want to feel that their money is being put into, let's use the weapons analogy, into killing people, for example. They feel uncomfortable with that, so they don't want to invest in anything with that. They don't want to invest in tobacco companies because they know that tobacco ultimately causes cancer, it causes all sorts of heart disease, lung disease, etc. So they don't want to feel part of that. Same with gambling, same with pornography, tobacco, we said tobacco, weapons, fast food as well as another one. You could say something like sugary food as well, you know, not necessarily fast food just as in high fat, high salt, but sugary food as well. So this is really what people want to do. They do it because they think, hey, you know what, I want to try and sleep soundly at night and feel like I'm doing the right thing with my investment money. So the trouble is that studies show that, generally speaking, 80% of these funds that are running a socially responsible investment portfolio underperform the benchmark. They fail to beat the benchmark, and that's the whole point of like picking a fund manager, right? You pick a fund manager because you want them to outperform the S&P, you want them to outperform the FTSE, or outperform the DAX, whatever it may be. And so you pick a fund manager and you pay higher fees because you are assuming and hoping that they're going to beat the underlying benchmark that they're kind of aligning themselves with. So if they're failing it, what you're doing is you're getting less return, and you're also paying fees for that management. So it becomes a case of, well, why would you do it? So the only reason you really would do it, and let's say this is generalization, I'm sure there are probably funds and ETFs out there that are doing well, but if we're looking at stuff, and I've kind of done a little bit of research on this, and perhaps the data is massaged accordingly. I get it, I know what data's like, but it appears to me that they are underperforming generally. So some unethical companies, if you like, or top 10 least ethical companies that when people surveyed, would be things like Nestle, because of their food production, the way they, I assume again that this is perhaps the way they are mass producing food. It's generally a chocolate or a sweet confectionery type thing. Perhaps they're not treating the farmers as people like, and so some people consider those as an unethical company. Then you've got Monsanto, which is the feed. They kind of, there's been a lot of controversy around those in terms of the seeds and the genetically modified stuff and what have you. Big one, of course, the oil companies like Royal Dutch Shell. For obvious reasons, fossil fuels generally not considered to be very good for the environment when burnt. Then we've got supermarkets in there like Walmart and Tesco. This is their kind of, people feel that they really are turning the screw on the farmers. Perhaps they're mass producing food or encouraging mass production and not great animal welfare. I know they're not actually the ones growing or the ones kind of producing the actual food, but perhaps the price pressure they put on the farmers is encouraging that. And then you've got other things like some of the banks as well. People are saying that they're unethical with the banks, the way that they invest their money, because there might be an indirect investment from the banks into some of these companies. And actually you find there was a news piece probably a few years ago where Oxfam, which is a charity, they have technically a fund. They have a large amount of money they put to work in a hedge fund model, and and some of those stocks that are invested in were kind of arms stocks, were tobacco stocks, were unethical, and they kind of didn't know because they just thought the fund was being managed accordingly. And some people who were giving to Oxfam didn't kind of know that this money indirectly was going into investing into unethical companies, and there was a bit kind of hoo-ha about that. So this is growing. This ethical investment, this socially responsible investing is growing, but it's a case of getting it right with the returns. So if you really want the returns, it doesn't seem to be the best thing to do. But if you want that conscious and you want to have the socially responsible investment, then you've got to kind of pick carefully to try and get those returns that we all crave in the markets. All right, guys, socially responsible investing. Take care. Bye-bye.